And the only reason that they're able to sustain the illusion is because they got really low rates. But municipal bond rates are going to rise. I mean, you look at what's happening with muni bonds already. Look at the charts; they're getting clobbered. So the Fed might be forced to start buying muni bonds. Okay, now they can keep muni bonds, but now they have to print even more money. Well, that makes bonds even less attractive. And now the corporate bonds are really starting to tank. And now the cost of debt for U.S. corporations, and of course now with the corporate bond rising, stock prices are starting to plunge because their earnings are getting destroyed because they have to spend all their money on interest payments. So now the Federal Reserve is worried about rising corporate rates, so it's got to buy up those bonds, right? And now the Fed becomes the only buyer of bonds. And the more bonds the Fed buys, the more everybody else wants to sell, right? And so then we just completely destroy the currency, and we have runaway inflation or hyperinflation. And at some point between the worst case scenario, the government is going to have to come to its senses, admit its mistakes, and then do what it should have done all along, which is raise interest rates dramatically. But the longer they wait to do it, the worse it is. Right? It's like the more alcohol you drink, the worse the hangover is going to be when you stop. You know, and you can't say the solution is, well, I'm never going to stop. You know, because then you die of alcohol poison or something. And so we're going to have to stop at some point. And I know for sure that you can't sober up by drinking more. And for some reason, that's what everybody seems to think, right? Everybody acknowledges now that America got into this problem because we borrowed and spent too much money. But everybody agrees the solution is to borrow and spend a lot more. And somehow, if we add more debt to the existing debt, then we're going to miraculously recover. Now, I think there are some people that think it's just a question of, well, we just need to reflate. Right? We just need to create enough inflation so that Americans can afford housing prices. See, the whole lot of it is that we don't want to allow the free market to rebalance the economy, because the free market wants real estate prices to go down, but the government doesn't want that, because when real estate prices go down, the banks are insolvent. So the government wants to find out, how can we keep real estate prices up? Well, there's only one way: make the price of everything else go up, and then in relative terms, real estate prices will come down. The problem is there's one price that won't go up, and that's the price of labor, wages. No matter how much money they print right now, wages aren't going up because we've got millions and millions of people who are unemployed. And the government is making it more and more expensive to employ them with all sorts of mandates and taxes and regulations. Meanwhile, a lot of the American labor force doesn't really have any skills that have much value. You know, we've taken a lot of our young people and we've kept them in school till they're 23, 24, and we've given them meaningless liberal arts degrees, and they owe hundreds of thousands in debt. A lot of them can't afford to work because that means they have to start paying back their student loans. They'd rather stay in deferment and maybe get an unemployment check or a welfare check or food stamps or whatever they can do. And of course, wages in America are much too high, and they're not coming down. You know, and part of it is the government pay scales have screwed it all up, because people that work for the government, you know, in America, people that work for the government make twice as much as people that work in private sectors. Which is, you know, usually you think of a civil servant as somebody who's paid less. That's why they use the word civil servant, right? And they'd be calling them civil masters, you know, when they're earning twice what we earn. But, you know, we have all kinds of laws that are preventing wages from falling, and so the economy is a disaster. So, now I lost my train of thought. Huh? I was talking about something else before I digressed into that. Where was I? Huh? Who was listening?
The labor rates are increasing.
Well, that was before that. But yeah, so the economy is not allowing that type of restructuring, so people aren't going to get jobs. Now remember, because I said that inflation, people think, yes, if we just can create enough inflation, people can afford these houses. We can't, because the wages aren't going to rise. And it's not just a question of, when you create inflation, you make interest rates go up. So that makes housing even less affordable, because you have the high interest rates. And what a lot of people don't understand is, during the housing boom, we overbuilt. We built so many houses, and we're still building them. We don't need all these houses. We can't afford all these houses. And a lot of people bought houses that were a lot bigger than what they really needed, because they were investing. And then, you know, people, if you think real estate's going to double, you might as well, double, get a 4,000 square foot house because you'll make twice as much money out of a 2,000 square foot house. So people bought houses that were bigger than the ones that they needed. People bought houses that people bought second houses. People bought vacation homes an hour from their primary residence. And it was all because they wanted to gamble. I mean, kids were going to college and they were buying condos when they only knew they were going to be there for 3 or 4 years. But they thought they would make money. They'd pay for their college. They'd pay off their college loans with the profits they made on their condos. And all this phony demand is evaporating. And so what's happening is young people who are graduating college, who can't find jobs, they're moving back with their parents. And elderly parents who don't make any income on their bank accounts anymore because yields are zero, they can't afford to live by themselves, they're moving in with their grown children. People are taking on roommates. People are living together. It used to be, and it's going to happen again, it used to be that before people got married, a lot of times people would never live by themselves. They always lived in an apartment. And it wasn't until you got married and you were going to settle down and have kids that you would buy a house. So when a couple got married, they would be in the market for a house. Well, now, because of the housing boom, you have a lot of single women and single men in their 20s and 30s who already own houses. If they get married, they're going to be looking to unload at least one of them. Maybe two. And I think as a lot of people are losing their jobs, I think you're going to start to see families sharing houses. I think you're going to start to see people renting out spare rooms. People who bought, these 4-bedroom homes when they're single, they have 1 or 2 spare rooms. They'll put ads in the paper. They'll be looking for boarders, especially when the cost of heating oil goes up, the cost of food goes up, and they can't make ends meet. All they have is a big house. They'll rent out rooms. So what does that do to the value of real estate? What does that do to rents? So it's going to take an incredible amount of inflation to get real estate prices to rise. Right? So, but in real terms, they're going to be crumbling when that happens. They're going to have to create, imagine how much inflation they would have to create to get wages to go up. Right? Because wages still need to come down. So and that is not a solution. A much better solution to the problem is to let prices fall. Let real estate prices fall, let wages fall, let stocks fall. But the government doesn't want that because then tax revenues fall. And then the government has to level with the American public that we can't make these payments. So the government doesn't want deflation, even though deflation is what the market wants, deflation is what the economy needs, but the government doesn't want any part of it. The government wants inflation. And unfortunately, it's going to get inflation, but it's going to devastate the economy. It's not going to be some kind of panacea. It's not a get-out-of-jail-free card. People say, oh, we'll just inflate our debts away. What does that mean? We're going to inflate our economy away. We're going to inflate our wealth away. We destroy the economy by doing that. But I understand that, and as an investor, people have to understand that. And a lot of people in America don't understand that that is how the cost of government is going to be distributed among the people. It's going to be through inflation. And you have a lot of politicians, and they don't have the political courage to do the right thing. Even if raising taxes were possible, they don't want to do it. Nobody wants to raise taxes on the average American voter. Everybody wants to raise taxes on the rich. I mean, that's easy. Sure, so do the rich, right? Because people will vote for taxes on other people. That's easy. But the problem is there's not that many rich people, and when you raise taxes on them, sometimes it backfires on you when you get less revenue. And I think that's where we are. I think if we raise taxes on the rich, we'll get less revenue from the rich. And not only that, but we might end up destroying the jobs of some of the not so rich. And so we'll get less revenue from them as well. So I don't even think tax hikes on the rich are going to be revenue positive. The only tax hikes that would work right now would be broad-based middle-class tax hikes. Maybe the imposition of a national sales tax or value-added tax. That would probably net raise some revenue for the government. It would be a mistake to do that, but at least it would raise revenue. But no one is going to do that because nobody wants to vote for that. The alternative is let's cut spending. Now, that's what they should do. They should cut spending, but nobody wants to cut spending because that means somebody's going to get a smaller check from the government or no check at all, and that person's going to be mad. And that person's not going to vote to re-elect whoever cut their check. And that's what the politicians really care about. They don't want to piss off any of the people who are voting for them. So the only way that our leaders are willing to pay for government is by printing money, because nobody seems to appreciate that that actually costs anything. They think it's freebie, right? If we don't raise taxes, we just print the money, but we got all the government for nothing. Well, if that's the case, why have any taxes? Just print everything we need. But what happens is when they print money, that's a tax. It's a tax on savings, it's a tax on the cash value of your annuities or your life insurance, a tax on your muni bonds, on your CDs, on the money that you have stuck under your mattress. And so if you want to avoid that tax, you don't own the currency that's being taxed. The currency that's being debased, and that is the US dollar. It's not happening to as great an extent in Canada, but it might happen in the future. And I think as more people around the world figure this out, if people want to know, why is gold at $1,400 an ounce? Is the gold bull market over? Is the gold market a bubble? And I don't think so. Either of those questions, I don't think the bull market is anywhere near complete. Because gold's price is not so much a reflection of what gold is worth, but what alternatives are worth, what the dollar is worth, what the euro is worth, what the yen is worth. And all of these paper currencies are worth less, and that's what gold is telling you. Why are they worth less? Because there's a lot more of them. The governments keep creating them. And the more money they create, the less the money is worth, and gold tells you that. Gold is a measure of value for these fiat currencies. And for probably the last 20 years, from not the last 10, but the 20 years of the 1980s and 1990s, that was a bear market. That 20-year period, the price of gold fell. And that was probably the heyday of central banking. That's when central bankers were held in very high regard, and the world was convinced that the central banks could replace gold, that they were independent, that they were staunch guardians of the integrity of the currency, and they would keep the politicians honest. Well, now we know that was a problem. Right? I mean, there is no independent central bank. They're all part of the government, and they're all acting to enable the government to spend. And now interest rates are at zero. Money is being created. And people understand that central bankers are politicians with printing presses. That's all they are. That's all they ever were. And people don't want that currency. People want gold. People are not buying gold because of uncertainty. I'm buying gold because of certainty. Right? I'm certain that the dollar is going to lose value, and so I don't want to own it. I'm certain that politicians will keep taking the easy way out. It's interesting that there are a lot of people in the financial press